metals are in focus before the Fed rate cut ahead, and we have Parthiv Jhonsa, who is the lead analyst at Anand Rathi Institutional Equities, who is joining us for this particular chat. Welcome to the show, Parthiv. My first question to you is that there is a slowdown in terms of, when it comes to the real estate sector of China, and this is overall affecting the global steel prices. So first off, I want to understand that, do you expect this trend to continue?
Hi. Thanks for having me. As far as commodity is concerned, China is the mammoth. It is almost 50% of the global consumption, and out of which, real estate is a very big chunk. If you see, real estate is almost about 35 odd percent of the total, Chinese consumption in metal. If you see over last, especially post, 2020 era, whatever stimulus the Chinese government has got, especially due to the real estate sector, right? The metal has rallied in anticipation of those stimulus. The same thing has been witnessed, last couple of days when the Chinese government is expected to, cut down the rates for their, a few $1 trillion of the mortgage, and the similar kind of a rally has been seen. However, if you see over last 3-4 years, the metal has actually cooled off thereafter, and we expect the same thing to happen in the ferrous side, that the prices should again come back and cool down a bit going forward.
Got it, Parthiv. Yep, we're talking of prices coming off at a time when, of course, there is a likely slowdown being engineered globally as well as in the US, especially in the US, but also with a rate cut expectation likely this week. How does that interplay with prices, in your opinion? Because ideally, it should help prices go up, it should spur demand, or likely demand may get spurred next year. Is that how one can look at it?
So let us actually break the entire commodity into two different baskets. One is the ferrous and the other one is the non-ferrous, right? The problem out with ferrous right now is, iron ore is also at a high inventory on the port inventory in China, right, which is actually dragging down the prices as far as ferrous is concerned, apart from your slug in real estate sector. As far as your non-ferrous are concerned, there has been some inventory liquidation happening. The demand has gradually picked up, especially for aluminium and copper. There has been some improvement seen there. You are absolutely right that there will be a bit of a sluggish behavior which will be seen over the next couple of months. I personally expect that the demand should pick up anytime post this autumn is completed.
Got it, Parthiv. Hi, Mihika, this side. So,
Hi.
we had a slew of, people say that, maybe the iron ore prices have bottomed out. Do you feel that a pickup is imminent? And what is your, expectation of prices going ahead?
Sure. So the thing is, iron ore inventory, the port inventory in China is already at about 150 million tons, right, which is at record levels, which is way higher than the historical average if you see. In order for the prices to pick up, first, the inventory at the port level in China has to come off to about, say, 125, 130 odd million ton, that kind of a number, right? Also, if you see during second quarter, that is during the monsoon season, usually the prices come off a bit, and the trend usually continues thereafter. In my personal opinion, till the time there has been no uptick which is seen in the ferrous sector within the mainland China, the prices will continue to remain range bound between, say, 95 to 110 odd dollars in iron for the rest part of the year.
Right, got it. Parthiv, I also want to understand that how do you anticipate the potential rate cuts? How will they overall impact the metal prices, and particularly the commodities that are priced in US dollars, if you can give an overview on that, and the potential impact, if you can quantify that as well.
Sure. See, what has happened over the last couple of days due to all the global scenario which has been playing out, especially from China and US. The steel has already been priced in for I would say about 25 odd cut from the Fed side. More than the cut, I would say the commentary of the Fed would matter a lot. That would actually play out a major role going forward. So I personally anticipate that up to 25 has already been priced in. Anything over and above that should play out positively. So if there is a say a 50 bips cut, that should play out positively along with what the commentary is. So if there is a soft landing commentary from the Feds, that would actually play out very positively. And if this is, just to if it's to control a certain kind of a panic, it might turn out to be a bit of a mixed reaction, especially for the metals are concerned.
Got it, Parthiv. So are you saying, if the outcome is as expected, you could see better pricing for metals as a whole in Q3, or do you think, the demand concerns and the inventory levels will kind of, offset that positive trajectory?
No, definitely. See, the demand from China will definitely play a very major role because if you ex-China, India is one of those few countries which has been playing out very well. But China, we cannot ignore China, right? So inventory levels in China and inventory along with inventory or basically demand and consumption pattern in China will also play out. So until and unless there has been a substantial stimulus in China, because all the stimulus in the past has not given out the kind of results which is expected to have given out. So there has to be a very big bang stimulus coming out from China in order for this to completely turn around and thereafter increase the prices should have increased.
Got it. Parthiv, just trying to break this down a little better. So what's the best way to play this therefore? What in your view looks good, both from a value as well as well-placed from a pricing standpoint, given that there are going to be challenges, at least that's what you seem to suggest?
Sure. So the best play out here is focus on companies which has a good domestic presence, because right now what is happening is India is one of those few large economies which is actually doing well. If you just check out any consumption pattern or even production and consumption both, say for steel, right? We are one of that economy which is actually growing on a year-on-year basis. Right now, our consumption for the first 5 months is up almost about 12, 13 odd percent, right? We are on our way to be a 140, 45 million ton kind of a steel consumption country. So India is definitely a better, domestic companies focused on India are definitely a better placed compared to, companies which has international presence. So in our opinion, say companies like say GSW or JSPL are much better placed than companies which are something like say Tata Steel in ferrous sector. And in say non-ferrous sector, we are very optimistic on Hindalco as a entity. Apart from that, we have a soft coverage on Vedanta. Vedanta Aluminium we are comfortable with. So these are a couple of companies to play out.
Got it, Parthiv. You said you focus more on the steel counters that have a larger domestic presence. But, despite being the second largest steel producer, we're still a net import, and that trend which started in FY24 seems to be continuing in FY25. So don't you think from a domestic aspect also these steel companies are hurting?
See, there have been news in the market for laying down a couple of duties and anti-dumping duties and everything on the Chinese and Vietnamese steel import, right? So that would eventually help the domestic players. More than that, see what is happening is in India we are actually importing say close to about 3.5 million ton, which there has been an import, but on the we are even exporting about say 2 odd million tons. So we are a net importer of about 1.5 million ton as on date, right? So the quantity is not that huge. It is basically the international prices which is hurting more, in my personal opinion. So that is the reason if you see companies like say JSW or say GSPL, which are actually enhancing the capacity and focusing more on the value-added product side rather than just the plain vanilla steel, those companies will definitely be benefited as in how the consumption pattern shifts towards more value-added product, right? So today, any company which is adding capacity in India are talking more on the value-added product side, whether it be ferrous or non-ferrous. And with GSW, being at the front runner, and especially having focus towards say automobile and various other sector. Similarly, GSPL having focus across a number of sectors, that is going to play out much better.
Right. Parthiv, I also want to understand as to what's happening with base metals. They've experienced growth in Q1. Now, I want to understand because, it has been a volatile space. And so overall going forward, do you anticipate, the base metal prices to, see an uptick going forward? And a follow-up on that, do you expect the base metal prices to react as to, how Chinese demand will play out?
See, base metal prices, copper or aluminum, if you want to say, they rallied because of various regions in Q1. Thereafter, they have cooled off a bit in the current quarter. Now, if you want to talk about say aluminum, anything a level about 2400 kind of a level for aluminum is a very good level in my opinion, because that is the level where a lot of these smelters would be making money. What happens is any level above 2600 level or 2550 level becomes unaffordable, especially because aluminum, the quantum of aluminum used in the new age sectors or automobile, have the quantum usage of aluminum has actually gone up in recent years, right? So there is also a part of affordability which plays out. Coming down to copper, I feel that the current level which is there is a very good level. Anything about 9000 is a very good level for copper, and I have been telling this that this level is possible to sustain going forward. Right now we are sitting at about say 9200 levels, which is a very good level as far as copper is concerned. Definitely, Chinese demand and Chinese inventory will play out. But if you see over last couple of weeks, especially post the second third week of August, the inventory liquidation has happened in China. Today, aluminium and copper inventory are low compared to July and August month. So that is actually playing out positively for the non-ferrous side.
All right, Mr. Parthiv. Well, thank you so much for giving us those and insights on the entire metal pack, and thank you so much for taking our time and speaking with us at NDTV Profit. But with that, we're completely out of time on this edition of Small and Mid Cap Show. But stay tuned to NDTV Profit for more news and updates.